everybody. Welcome to TraderMerlin Show. It is your Tuesday edition. Got a little bit of a short week, right? Had some nice day off for everybody out there. Hope you had a wonderful extended weekend. Of course, right back into the frying pan with some extreme volatility out there today. Nice move for the market to the downside. Of course, we can thank Tesla for that, and we'll talk a little bit about that as we progress today. But we've got a bit of a treat. I've been giving John a hard time because he couldn't get Skype on his laptop, and we improvised. We actually have Skype on his phone today. So for the show, which is How Low Can the Market Go, our guest is none other than the ambassador of opportunity, John O'Donnell. John, good to see you, my friend.
Nice to be here, Merlin. Me getting on Skype with you on this show is a testimony on why you ought to buy Microsoft, and why you ought to buy Apple.
Is Apple in there too? I thought it was just Microsoft. Oh, because of the phone.
Well,
Got it.
I'm on an Apple. I'm on an Apple phone.
Nice, John. So how you been? I haven't seen you in quite some time.
Well, same on me. My getting out of bed, putting one foot in front of the other, getting ready for my big move. I'm going to be moving to the East Coast.
Oh.
And I think I told you that.
Yeah.
And toward the end of the month, and it's going to be a new chapter in my life, getting closer to family, and I'm kind of looking forward to it, to tell you the truth.
Nice. Well, as long as you're happy, that's all I care about.
Well, I'm happy. I mean, happy wife, happy life, right?
Absolutely. Well, I have to come out there and visit you on the East Coast. Obviously, you saw what happened over the past few days. We've been talking on the show about just kind of how things have gotten a little bit ahead of itself. It seems like 5 companies really have been the workforce behind this engine that propels us to all-time highs, and all of a sudden came back to bite us a little bit. Market's selling off, and I thought, you know what, might not have John on to talk about where these markets may be going, or maybe even better, how low can they go? So what are your thoughts on where we're at right now?
Well, like everybody else, I have a crystal ball that's a bit cloudy, and it has a few cracks in it from repeated overuse. But that being said, at a very minimum, if we don't have at a minimum a 10% correction, and maybe in some sectors, I mean, if we're talking about the overall S&P, or we're talking about the large indexes, that's one thing. If we're talking about individual sectors, maybe that's something else. I think there's a rotation that very may happen, going from growth exposure to value. And if you have some nice long positions, don't you think it would be, and we've seen this before, Merlin, so many times, to have a minimum of a 10% correction from the all-time high, maybe even a 15% correction from the all-time high on the major indexes, I think it would be grossly abnormal if we didn't have that. Now, it doesn't mean we have it all in 1 week, or, and it isn't going to be like a Tesla event. Tesla has its own situation going on to promote more volatility. But so if you were to pull up a chart, I don't know if I can see a chart on here with you, but if we were to take a look at the all-time highs in the major indexes, maybe we could use the S&P to start with. What's 10% down? I think we're already down about 7%, aren't we?
Yeah, right about 6.99%. So, if a 10% drop in S&P would bring it to 32.28, we're at 33.35, which inconveniently actually puts it right into another area of demand. So, I agree. I think that would not be far-fetched to see it drop down to that 32.28 mark.
I would agree, and I think the real question here is: are you a momentum trader? And you're really interested in this short-term correction, or should you look at this as an opportunity? If you're an investor, or if you have part of your resources with an investment longer-term horizon objective, perhaps you ought to look at this as a wonderful opportunity. Get your your list together on the top 10 stocks, or 8 or whatever that you're comfortable with, you'd like to have exposure to on the long side, and start adding to it. Buying on the dips and selling on the rallies back up to the appropriate supply zones. But if you're a momentum trader, you're probably going to take a different look at it than if you're kind of an investor mentality. Now, I think most of the people on your show, your audience much better than me, but I think most of your traders' activity are in trading activity, isn't it, Merlin?
Yeah, they're much more active, certainly, than the average bear out there. So I think everyone is kind of going through chat here. People saying, "Hey, you know what? It's it's a buying opportunity at some point." Sure, these corrections are natural, and I agree with you, Big Ed, that correction, rotation, and process, it's healthy. I think the market needs this. John, you mentioned the S&P. I just actually brought up NASDAQ just for giggles. That's already down 11.4, which goes hand in hand with what we talked about over the past couple of weeks, which has been how dangerous it is to have an entire index and market, for that matter, being pulled by Tesla, Microsoft, Apple, Google, and Amazon. Those have just been pulling this thing up, and the NASDAQ's paying for it because obviously those are the major components of it, down 11.4% right now. So I think natural pullback, healthy.
I saw a show you did with Brandon, and you guys discussed, if you look at the FANG stocks, you take them as market cap, and they're tremendous moves since March. Compare it to the whole, as a percent of the gain of the whole S&P 500. Not all stocks are going to perform accordingly, and there's some inexpensive value out there that are. My feeling is that this expansion since March has really been a price to earnings ratio expansion. There are some companies that are making some wonderful profits, but there's a bunch of other sectors that are really dragging along. And this market got very frothy. I think it got overpriced, and it was due a sensible correction. Now, could it go down maybe 15%? Well, that's certainly possible. Could it go down 20? Well, whoa, that gets a little bit scary. But anything's possible in this market, Merlin. Plus, the market being a discounting mechanism, we got an election coming up in 60 days, less than 60 days?
Right.
And my feeling about going forward is there's going to be a lot of volatility. And regardless of who wins this election, Party A or Party B, they're going to be at least 50% of the population pissed off.
I think no matter which side wins, you said 50% are going to be pissed off. I think that no matter which side of it wins, 60% are going to be pissed off. No one's just going to be happy with it either way.
Nobody's going to be happy with it, but the real question becomes, how do they act out?
Yeah.
Is one particular party or group going to go out and riot and loot because their candidate lost? Is another group, and I don't want to talk about left or right, and there's no reason to use identity here, but one group, I'd lean in the favor of there's going to be more rioting, looting, and I find that very fearful, to be honest.
It's funny, Joseph types in here, he says, go long Riot stocks, and I agree with you. We obviously, I don't want to go into politics on the show, but it almost seems like you can go out there and loot whatever you want right now without any real ramifications, and if that just becomes generally accepted, I agree with you, John. I think you could see a lot more of it, and it's unfortunate. It's good for gun sales. You can see gun sales soaring right now.
Yep.
I want to look at this chart here real quick, and you can't really see this one. It's challenging. You mentioned there's obviously some good stuff and some good companies out there, good stocks, strong stocks, weak stocks. What I'm showing for the viewers at home is from those March lows that we saw on the S&P. I basically mapped out the 8 or 9 different ETFs that represent the overall markets, and every single one of them is up significantly from that point. And you see even the weakest out there, which if I'm correct, I believe that's going to be consumer staples. I actually thought it was going to be energy. It's up 32%. Your best performer is looking at 60%, just over 60% for technology. Everything's bringing it up, and that's why we've seen such a big drop, guys. If you look at this blue line here, that's technology. That's what's really taken this big hit this last few days. And the question is being begged here is how far or how much more will that come back down? Seems to me like the average should be right around 40, 45, 48%. That's still 12% higher than we are right now. So still some weakness to go, I think, in that tech sector, and to see maybe some of these markets pull back a little bit further, but just wanted to bring that chart up for the viewers. Now, you mentioned election, John. We always hear these facts and figures like, okay, market's always up in an election year. And, this obviously to me is an outlier year. It'll forever have an asterisk next to it. What's your take on that historical play that the markets always have an up year, given the uncertainty in what's going on right now in our political environment?
Well, given the political risk, and given maybe even some of the geopolitical risk, and given the pandemic risk, this is really, I don't think we can look at old metrics. You'd have to go back to 1918 to see how those election periods performed, with a pandemic, and it's global in perspective. Are we going to have a rekindling of, the hot spots that are going to pick up with the flu season as it comes closer each day? Because of the political volatility, I personally think, I hate to say this, but I personally, for all of you that have a long bias, I think the top is in for the year. It wouldn't surprise me a bit if it drifts lower, occasional rallies, drifting sideways in a relatively narrow range. But some of these political events, there's going to be a lot of mudslinging that's going to go on what I call steroids squared this last quarter of the year, certainly up until the election day. And I think that's going to spook a lot of people. Mm-hmm. And but I think, I think it's, let's preserve capital. Let's be cautious. Now, what does that mean? You lighten up on some of your long positions. If you've got there's some great companies out there that, regardless of how it plays out in the future, are going to continue to grab market share. They have access to the best talent. The credit market is available to them at very, very inexpensive prices. They got great branding. They got a proven place in the marketplace. There's no question these are great companies. The real question is, great companies can get way overvalued, and those extremes need to be corrected. And that's, I think, what we're going through now. But 6 months from now, a year from now, you don't think Apple, Amazon, Google, Tesla aren't still be kicking butt versus their peers? I do.
Yeah. I think all of those except one name. I think you're right. I think Apple, which I've got the chart of Apple up here right now, and it looks beautiful. Actually coming back into some areas that might be attractive buy points down around 110 for you. If you look at Amazon, I think Amazon's always a buy. It's just my take on it. But, you come back down significantly on it. You're at 21.49. Microsoft, of course, I don't think you can go wrong with Microsoft. And now Microsoft actually looks like a pretty attractive one here near some demand levels. Yeah. I am not, I disagree on the Tesla. I just don't think that it's going to sustain its upward trajectory, like the other markets. You have more increasing competition in their space. You've got beyond overinflated valuations for Tesla. So I think it'll be that star that just falls from grace. And granted, it will probably go up over time, but I don't see anywhere near the growth that you'll see in at least the more stable internet companies. This is, call it a technology company, but yeah.
Let me ask you a question. At what price would you find Tesla attractive for the longer term? If it corrected another 25% from here, would you want to add some of it?
I don't own any Tesla. I've never actually owned Tesla. The only thing I've ever done with Tesla is buy put options and short it. Do I want to? Would I be interested in buying some call options? Sub 200? Sure, why not? They'd have to be leaps. I would go for the longer term, but I'm not a fan of Tesla's, certainly not the automaking side. The battery part excites me and some other pieces, but the car making piece doesn't really do it for me, especially when you look at the established car makers like Toyota and Honda and Ford and GM all being they could very easily and quickly get into this space with some acquisitions. So I think Tesla maybe got its days numbered.
Yeah, I would agree. The GM bought an 11% stake in Nikola today.
Yep.
And apparently Nikola's going to subcontract the manufacturing of their trucks out to GM. That gave GM a boost. If you pull up GM, I think GM's up about 8%. So, what's going to happen to GM, Ford, and Chrysler? Who knows? They so missed the boat. It's unbelievable.
Yeah, I think Big Eb said it right there, and I was just going to say something along those lines. He goes, Nikola has cred now, and that was my argument early on. It's like they've got this pipe dream, but they don't have any partners. You're the small. You're a minnow in a sea of sharks, and all of a sudden they lined up a shark with them. So, what Nikola's doing. I'll bring up the chart of Nikola, guys. It actually had a very nice pop today, of course, off that news. This is what they need. They need to get partnerships like this because the cost to spool up an infrastructure manufacturing line could have crushed Nikola. I don't think they would have gotten there. Now all of a sudden you're using GM's facilities. That's great to have the expertise, experience of General Motors to build this Badger truck. And of course they have other partners as well that will, potentially take it up to another level with the big rigs and things like that, which to me is a big untapped market. So bravo for Nikola, but it still did what I thought it was going to do, guys. I'm always going to keep that one. I thought it would go from 70 down to sub 30, and it did. But now this is actually a very good piece. Question, John, Joseph says, what will Ford do? You've got Ford probably now looking at it going, we already have some electric vehicles. I know they have electric vehicles and all, but I mean, to me, this with Nikola and GM, it really speaks volumes of anybody else in that space could potentially be a target of acquisition or merger with Ford. I mean, they need to get it more active in it.
Would be interesting. I mean, I don't know. I think they missed the boat too, just like Chrysler did. Volkswagen's coming out with they're going to be a player in this. So the European companies will have a day in the sun as well, I believe. But I don't know what Ford's going to do. I mean, they don't. I've been grossly underimpressed with Ford. I could make the case that somebody like Tesla ought to. I mean, you could almost buy Ford out of their petty cash fund. And it would have almost no dilution on the stock, and they could tie into that manufacturing expertise and infrastructure and distribution. I mean, at the end of the day, it's one thing to make an automobile efficiently and profitably. It's another thing to distribute it. And that might be, you might see something like that. Maybe Tesla will go out there with the market cap that they have. Why wouldn't they want to get in bed with somebody that can add value to, production and distribution?
Well, I'll let everybody know this is something that is a little bit different because, Ford obviously I think has to get into this space. However, they're already there, and maybe this is. We didn't talk about it in depth on the previous, when I did a show on electric vehicles, but Ford is also, I don't know if they bought into or are partnering with Rivian, which I like a lot better than the Nikola truck from a looks and aesthetics perspective. Amazon is also in that project. So, if I'm looking at the competition heating up in this electric vehicle space, Tesla, I apologize. I know some of you guys think that their truck looks amazing. It looks absolutely horrible. I think it's one of the dumbest looking vehicles I've ever seen. I'll share this one with you. If you go to Rivian.com, I almost pre-ordered this bad boy. This thing looks awesome. I don't know if you guys can see this at home, but John, in their truck, it's a double cab truck just like mine, and it has right behind the cab, in front of the wheel well, it has this like a wall that you push. And it slides out, and it's got a full-on sliding kitchen. Gas stove, water running, sink, grill, everything built in, so I don't have to take a camping stove anywhere. I'm like, look at this going, that's cool. Now you're dealing with something that I'd buy. So, Amazon and Ford, guys, already in the space. This may be the catching up piece that General Motors is doing to keep up with Ford. So I threw that one out there just as kind of to see if anybody would remember that Rivian was in this space. But yeah, Rivian is already in there with Ford. So, again,
Very
I think
cool.
You'll see more of this.
Very cool.
Yep. You going to get yourself a nice truck when you go to the East Coast, or are you going to be your Toyota Camry guy?
Oh, let me make that decision later. I have to. My wife and I went camping, about 30 years ago, and I said, when we go to camping again, she says, look, I did that once. Get off of it.
All right, not even an RV. Maybe there'll be like a Rivian or a Tesla RV coming up here. As soon as they get the big rig truck market down, hey, Winnebago's got to be quaking in their boots.
Of course, Ford's got that F-150. It's one of the most successful vehicles in the history of production, and it'd be interesting to, make it an e-car or e-truck. Yeah. We'll see where it goes. It's going to be interesting, but they're going to have put their oar in the water if they want to. If they want to compete. I mean, it's a new world, man. Yep,
that it is. John, the other part I want to get to here is gold. I know you've been talking about gold quite a bit, and it's been months and months and months since we had you on the show. Gold did an amazing thing back in July. I mean, its vault from 1,800 to well over 2,000 was pretty impressive. But now it's actually forming a pattern. I'll bring up the chart for the viewers out at home. Gold it's actually forming a descending triangle. It's starting to look weaker and weaker and weaker. And, I just wanted to get your take on gold going forward, where you think it might be headed.
Well, I think it's obviously gold at this stage, given where it's gone. Of course, my history of gold goes back to when it was $42 an ounce. So I have a special bias toward gold for a lot of different reasons. I look at gold as an alternative and a risk management tool for the fiat currency system going into a state of challenge across the world, as a matter of fact. So I always have felt 2 to 5% of your portfolio, your safe money, ought to have some exposure to gold. Now, you could use futures, you could use bullion, you could use coins, you could use options, or the mining shares. But here's short term. I think we need to see gold find a bid here, and we need to stay above 1900. And it's going to be related, of course, to the dollar. You tell me what's going to happen to the dollar short term, given going into the year end and going into the uncertainty of the election. Is candidate A going to be bullish for the dollar? Is candidate B going to be bearish for the dollar? You tell me, because those two are connected at the hip.
Yep.
The dollar and gold. So, I don't trade currencies. I don't have a feel, but we need to see the dollar either get weak, which will be bullish for gold, or we need to see the dollar firm up, and then that would be short-term bearish for gold. But long-term, look at gold not as just a trade or an investment. Look at it as a hedge against loss of confidence in the fiat currency system across the world, and have a small exposure to it. Mm-hmm. And just put it away and let it collect dust. You and I have talked about gold coins repeatedly. That's probably the most efficient way your audience can have. You can have a small exposure if you want, but why not have some exposure to gold, especially over this election cycle?
Let's see. A few people asking, like, how's the dollar going to be strong, etc. Look, going into the election, I think the one thing we can guarantee is uncertainty. I saw some poll that said Biden's winning 70%. Now, the bottom line is I don't care. It makes no difference. We heard Hillary was going to 85% chance of winning too, and Trump ended up winning. So forget all the stats. It's all garbage. Just go out there. The best thing that you can all do your research, do your homework, find your values, and go out there and vote. Make sure that you vote. Of course, I'll be annoying when we get near election time with regards to that. But with that uncertainty, what I think will happen, I'll give my forecast for the next few months. I think what you'll see is a market that, as John says, the top is in and slowly drifts down. I believe because that market's going to drift down, you'll probably see bond yields go up. And bond yields will go up. I think you'll actually see the dollar start to rise. I didn't think we would bottom out yet on the dollar. Here's the dollar index, guys. It's had a great couple of days. But I do think that dollar may actually get a foothold here, and we'll see if it can start making some new higher highs. And then that actually makes me bullish on the dollar. As these equity markets crush, you should see that dollar start to rise. That's that historical inverse relationship. And this is a weekly chart I'm showing you here. Here's your daily. You can see we've had, almost a week and a half of just nothing but up for the dollar. Not out of the woods yet. Okay, not out of the woods yet, but if we get above 94 on the dollar, I might flip my camp here and all of a sudden be very bullish on the dollar index. If that happens, market dynamics are going to change, and I think you'll see the equity markets continue to sell off. There you go. That's my end of the year wrap-up.
Well, I think it's pretty good. As a matter of fact, that will be bearish for gold if that happens. On the other hand, if the dollar weakens, if the market assumes all of this political uncertainty is going to be a headwind, and it probably will, we'll see how it prices in the dollar. So I would encourage your audience to keep your finger on that DXY price and pay some close attention to it. Give it some, because all the assets you have, your wages, the value of your home, most of the equity exposure that you have is probably related to the dollar, and it would be good to have some diversification, I think.
Yep, absolutely agree. Diversification is good, and that might actually, we look at the currency side of things, that could also be a good place to be. I have to repeat this one, even though I normally wouldn't. It's that Jerry says, Biden would have a full-blown dementia by elections, and he would probably end up voting for Trump. I'll tell you what. Let me just... Yeah, I don't even want... I was going to say, who agrees with this statement that out of the 330 million people that we have on this planet to represent either party, these are the two people we have to choose from? I mean, that's pretty bad in my opinion, but anyway, we won't go down that political route anymore.
By the way, let me share a little story with you. You remember a humorist by the name of Art Buchwald?
No.
Art Buchwald was a columnist in New York. He was a humorist. And when Reagan was running for president, I think it was the first time, Art Buchwald said something like this. Bear with me. He said, what are we doing running with, this B actor? I mean, that's our best thing we can do. Here we live in a country, but at least 50% of the people are left-handed. So we don't want a left-handed president. So that eliminates half the population. The other people are bald. I mean, another 20% of them are bald. We don't want a bald president. So we'll take this guy. And then it keeps on going down this list of criteria. And like, why is it in a country as dynamic as America, we end up with a guy that played the lead in a movie called Bedtime for Bonzo? And of course, the rest is history. Reagan changed the world. He really put it to the Russians. Berlin Wall comes down, and socialism starts to crumble in Europe.
There were the questions, and this is from Marcus. Is historically, how has the dollar performed during the 2 months running up to the U.S. elections? I know it's kind of hard to see, guys, here, but I put a faint line, and I guess we could put one on the markets right now, which would be somewhere right around there. These are the previous elections. I'm kind of very loosely going for you. 1, 2, 3. This actually would be back here. Loosely doing every 4 years. So let's see. 1, 2, 3. And that would be 4.
Did we have a pandemic on in any of those sites?
No, we did not. But you look at this chart here, and I don't know if there's any real discernible pattern that happens all the time. You can see that as Trump was elected, dollar rallied aggressively during that election. The one before that, it was actually selling off for 6 months before that. Before that, we had in 2008 a really aggressive rally up. So I don't see anything really. Anything clear here that would say historically there's a norm. I mean, I could probably go back and find some statistical site that would give me that information, but for me, I don't see any pattern to hang my hat on here at this point right now.
Not only that, but I don't think in any of those cycles, Merlin, we ran anything near a $3 trillion deficit.
Yeah.
And who knows how this is going to play out. You kind of wonder why Biden wants the job,
I wouldn't want it. I mean, I don't care what it was. There's no way. No way. Let them have it. Yes, I do. Batista, I think if we had Cardi B as the running mate for Kanye, the sad part is just because of the young popular vote, they would go, oh, Cardi B and Kanye. Sadly, they might actually have a chance of winning. That would just be amazing.
Sure, they would. I'm sure they'd clean up the swamp real quick.
Oh, yeah. Great. Yeah. Twerking would be taught in schools. All right. What else you got for me, John? We talked about gold. We talked about markets. I think you and I are both in agreement that
I want you to take a look at Zoom.
Pull up Zoom. All right.
Zoom got crushed.
Well, it's funny because you look at I've got the daily chart, or this is the monthly chart, guys. So when you look at the monthly chart, you're going, crushed my ass. This thing looks amazing.
No. Let's pull up even a daily chart.
There's your daily. Okay, so good.
Okay. Again, this is a great company. There's no question it's going to have an incredible future. But great companies can get grossly overpriced.
Yep.
And this is where I'm talking about PE multiple. And they don't even talk about PEs much anymore with that company. It'd be almost infinite, or they recently had a good quarter. But that being said, it's price to cash flow or price to gross sales. This thing is off the charts. And it's a valuation situation that, we saw it in 2000, Merlin.
Yeah.
I mean, we saw it with all the major companies. It was ridiculous. I remember, Mike McMahon and I were talking about Cisco, and God, I mean, adjusted for what's taken place, you wonder where it's even back to where it was in 2000. There's some companies that have never gotten back to where they were in 2000, like Citibank.
But Cisco's. I'll bring up the monthly. Cisco. You look back at 2000, it's not even close to where it was in 2000.
There you go. Pull up Citibank. Take a look at Citibank.
Well, that's a different one because you had all the splits and the weird, adjustments that were made. But here's Cisco, guys. The high that it achieved back in 1999 or actually early 2000 on Cisco was $82 a share, and it's at 40 today. And that's, it just can't get there. You wanted Citibank?
Yeah.
Yeah. That's great. But remember, this is split adjusted, guys. Citibank was never a $550 stock. But back in 2006, it was split adjusted at $570, and it's currently at 51.
There are a whole bunch of reverse splits.
Right.
But the point is, a company, even though it's a great, Citibank's not going out of business. They're a great company, an incredible balance sheet. They service clients all over the world. that being said, great companies can get radically overpriced. And Amazon, I mean, Microsoft, Charles Schwab got crazy priced back in that era.
You know,
Ameritrade.
Right now, the PE ratio on Zoom as of close today is 448. And it's funny because you look at the chart here on ZM, it was up over 450. That's what the high on Zoom. High on this one was 478. So your PE ratio was much higher at that one point. But this is one of the main things I was looking at with Tesla. Going, it's just way overdone. And the fact that all businesses and schools now need some video conferencing service and software like Zoom certainly bodes well for the industry. But we got to be careful not to chase that fish too far upstream before it comes back and bites you.
I mean, it's a great company, but at what price?
Yeah.
It's all about price and valuation. Now, we know that value is subjective. Somebody's buying it at that price. Somebody's selling at that price. They're two different opinions. The beauty of the market is it lets us all facilitate and execute our subjective value.
Right.
And, what's somebody's trash is somebody else's treasure. And
I got an oddball question, total left field one, John. See if I can stump you right here.
Right.
Let's see, where did it go? This is from Joseph. He says, what's John's favorite finance movie?
Trading Places.
Yep, that's mine.
And what was that one about the .com bubble that burst? What was the housing bubble that burst?
The Big Short.
The Big Short.
Yeah.
Those are my two, 1A and 1B. And I still recommend people go watch both those. I think there's great lessons in those. Whether you want to trade orange juice futures or not, it's another story. But I think they're great lessons in them that we should all adhere and listen to.
Yeah, I think The Big Short has the most lessons. Obviously, the humor and fun of Trading Places makes it one of my top ones. But The Big Short kind of pulls back the curtain a little bit on an entire industry that I thought was just deceptive. And yeah, I just that one was eye-opening.
That was a whole movie about valuation, wasn't it? Valuation extremes that turn out to be grossly unsustainable.
Yeah.
And the opportunity that allows someone to participate.
Brandon says, why are we measuring prices in dollars? It's just because that's the way the system is set up. It might change to something else especially as soon as we lose the reserve currency status, if that ever does happen. But right now,
well, you can price any equity.
Sure.
You can trade in multiple currencies. How many euros does it take to buy 100 shares of Microsoft? Now, you and I are familiar with a group. We had them on Power Trading Video called Priced in Gold. Mm-hmm. What they do is they price everything in grams, micrograms, or ounces of gold. And that's the baseline. Everything fluctuates in metal. That there is a price ratio between, a gram of gold, and you can price anything. And they've got, if you go to the right side of their homepage at pricedingold.com, you'll see a whole bunch of ratios that take a look at prices of real estate, various equities, college education. You don't have to use dollars. It's just the government wants us to use dollars because they got the monopoly to print the money and dilute and devalue the currency. So anything that you've got that's long-term valued in dollars is going to have to withstand that risk of price volatility. Price in gold. Now, that doesn't mean gold isn't going to fluctuate in price. Gold fluctuates aggressively in price,
right,
but both up and down. But that's an opportunity for a momentum trader.
All right.
I'll tell you an interesting exercise.
Do it. Jumping jacks?
One last thing. In 2000, it took 44 ounces of gold to buy 1 unit of the Dow. Okay? Now, with the Dow today at what? Its current price, divided by $1,900, which is the price of gold. You do the math for me, Merlin, because I'm not in front of my computer. How many ounces of gold does it take to buy 1 unit of the Dow?
Oh, how do I know? Come on.
Well, you would take the price of the Dow and divide it by 1,900, and that would tell you how many ounces it takes to buy 1 unit of the Dow. But my point is this: compare it to 2000. In that bubble, it took 44 ounces of gold to buy 1 unit of the Dow.
Yeah. 44. All right.
And today, what does it take? Take the price of the Dow. What did the Dow close at today?
27.5.
Take 27.5.
So you're at 10, right?
Pardon me?
And, you're talking roughly 2,000 for gold. So it's your multiplier of just call about 13, 12, 13, somewhere in there. My math skills are.
So that tells me this bubble that we're in relative to gold of the 2000 era is that this bubble is bigger, that gold is actually outperformed.
Yeah, I get it.
You get it? Okay. So in answer to that person's question, you don't have to use dollars. It's the custom that we use dollars because the fiat dollar by the legal tender laws have been forced on us.
Yeah. You guys are. All the numbers. It's funny because all these numbers are coming out different. All right. Let me just do the numbers here. I didn't have my calculator up, but I will bring a calculator right now. So you're talking. I'll do 2,700 just to keep it easy. 27,000 divide by 1931930. So now you're looking at the gold ratio. It's 13.9 roughly.
Okay. It used to be 44.
Okay.
In 2000. By the way, there have been times in history. 3 times in history, since we've been keeping these price records, where it took 1 ounce of gold to buy 1 unit of the Dow.
Yeah.
Put that in your pipe and smoke.
We're getting a little bit ahead of ourselves. All right.
So, if that's the case, is the Dow overpriced or is gold underpriced or vice versa?
Vice versa. Or we do meet some happy medium along the way.
One of which was during the Great Depression. At the bottom of the Great Depression, it took about 1 ounce of gold to buy 1 unit of the Dow. Gold was $42. The Dow got down to 42. So if you look at these historical price ratios, let you put your thinking cap on.
Yeah.
But right now, every financial instrument that I know of, certainly in the United States, that's publicly traded, makes settlement in a fiat currency under the legal tender laws.
All right, I had the page up here, guys. This is pricedingold.com. As you can see on the right-hand side, there's tons of different stuff. There's actually a few cryptocurrencies that it's comparing against too, which I think is rather interesting. So it's got currencies, it's got different markets, GDPs, stock exchanges. It's kind of a cool place for reference.
Minimum wages, price of electricity.
Big Macs.
Yeah, Big Macs. Of course, rent, real estate, average single-family home. I mean, copper, other commodities, labor.
Mm-hmm.
I mean, everything can be measured. By the way, one of the best economic barometers, I believe, is the Big Mac Index.
Yeah.
If you look at all the inputs that go into the production and distribution of a Big Mac, it's a great inflation indicator.
All right, Burgernomics. Get it while it's hot. All right, John. Well, any I guess you're not teaching any classes or anything like that. So when are you gonna? We talked about doing a 3 show where you bring on some guests. And I have.
Okay. Well, let's do that. We'd have to do that toward the middle or end of this month, maybe the end of the month, or we'd have to do it once I get settled on the East Coast.
All right, sounds good to me, John.
But I'll be happy to, if you can handle the technology end of it, I'll be happy to go out and find you some interesting guests to beat on.
Looking forward to it.
Thanks,
all right, John.
buddy.
Thank you so much, buddy. Take care.
God bless you. Peace.
Guys, that was John O'Donnell. We haven't had him on in quite some time. Ambassador of Opportunity used to be my regular Friday host on Power Trading Radio, so hopefully we'll get him back on with some great guests. He always goes out and finds just amazing people, so hopefully we'll do more of that in the near future. He and I both kind of stand in that same camp, that we think that things may be drifting down. We might have reached that peak for the year. Who knows? It just seems like all of a sudden the fuel that was rallying this market to the upside may be fading just a little bit. Okay, I'm going to go into, let's see, a couple different questions here that came in. I'm going to try to get to these real quick, and then we'll wrap up. Baldhead Bees sent this one in at TraderMerlin.com. He says, I'm looking into various trading journal platforms. Do you have any platform you recommend? I've looked at Trading Diary Pro, TradeSync, and good old Excel. I'm currently on Excel, but wanted to automate things that generate reports for me to ID my good trade patterns and my mistakes to avoid. Unfortunately, I don't know about those trading software that tracks your trading journal. Wasn't there when I started, so I just never used them. Here's the thing with journaling. You want to do a couple different things. Number one, most platforms have a performance review. So on TradeStation, you can actually hit and it'll issue a performance report on how you've traded over a specific window of time. It'll tell you, your average drawdowns, your big average winner, average gain, losses, etc. To break it down a little bit further, you'd have to, really kind of dig deep into it. And I did that with Excel spreadsheets. And what it would be was I would go over the course of a day. I'd pull down my trades, because remember back then I was doing a lot of trades per day. And I would just kind of find out where the money was coming. And that was easy because as I downloaded my reports, I could see where you would just basically have line items, say, bought, sold, profit, or loss, whatever it would be. And I could see real quickly that I could add that morning part up, and generally that's where I did the best. I did really good in the evening, and then I also did poorly in the afternoon session. So, that helped me understand the time of day I traded best, because most reports aren't going to give you the time of day. But if that software, Mr. B's, helps you break that down and put it all into one place where you can easily digest it and break it apart, then go for it. I don't have a preference on there. Maybe some of the viewers out there have used some of that and look towards some software to assist there, but mine was just good old-fashioned sitting down with a piece of paper, Excel spreadsheets as well, and just saying, okay, which stocks do I trade the best? Which markets do I trade the best? What times do I trade the best? And that was all done manually. I did find out the interesting numbers about my reward to risk ratios, my average wins to losses, and that one of the interesting, really cool thing that came from TradeStation actually out of the reports was that I make more money shorting. And I did much less shorting. So I was doing 70% longs, 30% shorts, yet most of my money was coming from those 30% shorts. So of course my perspective goes, hey, why don't we start looking at the shorts more often? I don't know why that's the case, whatever it may be, that's what the numbers were showing, that basically I was doing better at that time. All right, let's go to question number 2. Got a haircut? Yes, I did get a haircut. It was so weird. Oh, by the way, remember we talked about inflation? Yeah, I'm a guy. I was telling a friend of mine that I went to get my haircut, and she was like, oh, where did you go? expecting ooh, bougie salon. No, man, just 20-something bucks, supercuts, give me a haircut. What can I do with this? I'm balding. Anyway, I went there, and supercuts used to be $20 per haircut. It was $25. That's a $25. It was either $21 or $20 for a haircut. Now all of a sudden it is $25. I'm like, that no inflation there, folks. None at all. It's all of a sudden much higher. And I'll tell you what, as soon as all this COVID goes away and vaccines, they're not going to go back to $20 haircuts. It's going to stay at $25. Inflation? Oh no, it's not. It's nowhere. It's no problem. All right. Peter says, I see a demand zone on IWM around 148.16 to 144.71 on a daily. Thought it did not hit. I thought it did not hit. Would you take the consideration futures contracts are about to expire? Do you think that demand zone would hold, or maybe play with follow along with the futures contracts? Let's just look at IWM so I can show you that chart, and we'll look at those levels. Right now you are really kind of catching a falling knife, but it's how low will that knife fall? That's the big multi-million-dollar question that's in all of our heads. So here is the IWM you mentioned. The numbers I'm going to are slightly off. I'm not using a snap mode here. I think you actually got it. Yeah, there it is, snap mode. So there's your 148.16. I'm close enough. I'm a penny off. And you have 144.71, which is probably the low end tail here. So, I like the demand zone. I do, just because it's the only thing or the first obstacle it's going to get. However, if you look at the action that happened in that demand zone, I'm really not... that's this area here where you look at this big yellow block I'm putting on your screen for the viewers out at home. That's a 2, maybe 3 week window of time where it just floundered sideways. I don't feel like there is good demand there. I think that would actually be just take it out. So I would actually have to look further down for it. So I'm not a big fan of that demand level now, right? And to me, looking at demand levels or supply levels, it's all based off of things that you see in that zone, which would cause you to believe that it's either going to move up or down from that price point. Since it's the first area of real sideways action, well, that makes me think that might be where it could stop at. But of course, you look at the construction of that zone, and it's really not that strong. So I probably would pass on it. You could take a stab at it, but make sure you stick to your stop loss just to make sure you don't get smoked on that one. Because right now there's a little bit of panic starting to settle into the markets. All right. Let's see. I get the Pelosi blowout. Yeah, I had to wear a mask, which was weird because she totally screwed up the sideburns, right? Because where's the straps for your mask are like on your sideburns, so she's like pulling them down and they're all crooked. I mean, I could have done better myself. All right, I gotta get going. So let me just real quickly show your economic announcements. Oops, your economic announcements. Where do I have that set up? Because that's the only thing that's really important for tomorrow. Okay. Here's your economic calendar for tomorrow, the 9th. The only really important thing tomorrow is going to be Canada. Yes, Brendan. The Canadian market day tomorrow. It's the BOC rate statement happening tomorrow. Really no big change. It's 25 basis points is the expectation. That's where it's been. So, I don't see any real shockers there. But if you look at the CAD, I'll bring up the Canadian dollar here. If you look at that USD CAD, it had a pretty big spot, as a bump to the upside here. And, I'm not sure if that's going to continue. You do have some supply levels that are getting around that 134 mark. If that dollar does get some fuel underneath its legs and continues to rally, and we get some maybe some negative news out of Canada with regards to rates or statements from the BOC, you could see this rally up to that 134 mark in no time. All right, there you go. I'm done. How come there is panic after 3 days but euphoria after 3 months? Because the markets are designed to go up and people are long biased. Most people are buy and hold investors. So a market can go up forever and everyone's happy and feeling really good about it. And if you go to the south side and you get a sharp sell-off like we've had recently, we're almost 5% again on the NASDAQ today, that makes people like, oh no, my profits, and then they start to panic. And then that creates buying opportunities. All right. You can sit in restaurants? Oh, that's true. Yeah, I'm eating food in the restaurant, Tom. So yeah, I can eat in there. It's weird. You can't get into the restaurants without a mask. But when you're at your table, you can, yeah. Guest for tomorrow, GD. She says, who's on tomorrow? Not sure. I was going to have, you might have seen a video by a guy named Dwight Traderman. I may have him on the program. I'm not quite sure. We'll have to see how that one goes. But that is the plan for tomorrow, is to have Dwight Traderman on. I'm going to see if I can reach out to him after the show and get things all set up. I have to go get a COVID test, which I'm really not looking forward to. No, I'm not ill whatsoever. I'm just going to be traveling this weekend out to the East Coast, and apparently you have to have a COVID test to even travel nowadays. Am I right, guys? Do I have to? Anybody here from the East Coast? I'm going to Boston this weekend. Do I need a COVID test just to go to Boston? I'm staying with a friend of mine, so I don't think that should be an issue. But according to them, I do, and I really don't want to get a COVID test. I don't want to get some stick shoved up my nose there and really make my day. Not a lot of fun. We are going to have Walker Anglin on Thursday's show, so that'll kind of wrap up our week. For those of you who like Forex, he's really active out there on his Facebook page. He's doing tons of stuff in the Forex space, so Walker Anglin will definitely be our Thursday guest. Tomorrow, yeah, damn it, Tom, you didn't make my day. Yeah, New York City, yes, just to fly? Oh, man, I do not want to get that. I don't want to get a COVID test. They're terrible. Freedom, right? All right, guys, that'll do it for me today. Not sure about tomorrow. We'll see how that goes. Hopefully, it'll be Dwight Traderman. If we don't, it'll be fine. If we do, it should be an entertaining show if we know who Dwight is and his perspectives on markets and how he is let's just say the way that he sells things. He and I are going to have some fireworks tomorrow if he's on the show. All right, that'll do it for me, everybody. You got your economic calendar taken care of, so tomorrow we'll just be talking markets and hopefully with Dwight Traderman. Till then, happy trading, everybody. Hit that like button if you enjoyed today's John O'Donnell show. You can also go visit John O'Donnell on Facebook. He posts a ton of stuff on there and on Twitter. That'll do it for me, everybody. Talk to you later. Bye.